Good afternoon, everybody. This is Todd Rich with Nadex, and this is going to be a webinar on the basics of technical analysis. And I know at Nadex we've had, with all the volatility in the markets, we've had a lot, and I mean a lot. It's almost mind-boggling how many new customers we've got coming into our markets. And we've got a lot of folks who are new to trading in general. So for all of those who are new to Nadex and new to trading, I'd like to say welcome. Welcome to Nadex and welcome to the world of trading. It's an exciting opportunity. And I know that people are looking for some skills to build out their day trading abilities. And that's what we're going to go through today. I mean, technical analysis, it's a fancy word. It's really all about charts, and even charts can be intimidating to people who are brand new to trading. So we're going to go through all the basics. You know, I realize after all the things that I do with Nadex, I don't even have a bio slide. Most people put a little bio slide up there just to give you a little background on myself. If you'd like, you could probably track me down on LinkedIn if you're on LinkedIn. But I've got an extensive portfolio of experience in trading. I spent just about a decade on the trading floors in Chicago as one of those people frantically waving their hands, buying and selling down on the trading floors, and then moved into the exchange space with a stint at Deutsche Börse, who runs Eurex, very, very large global exchange operation headquartered out of Frankfurt, Germany, and then to Boston Options Exchange, and then to the New York Stock Exchange. Was at the New York Stock Exchange for a while before I went over to the retail brokerage space, which I went to a company called Options House, which got bought by E-Trade, and then E-Trade recently got bought by Morgan Stanley. But it was out of E-Trade that I ended up over here at IG and Nadex. So an interesting journey, but all through the ways I have learned quite a bit about charts and technical analysis. It's the only reason I wanted to kind of give that to you, just to give you a little background into some of my experience. Now, before we get into today's session, I do need to share this disclaimer, as all of our webinars are sponsored by our compliance department. That trading involves risk and may not be appropriate for everyone. That trading decisions you make are solely your responsibility and at your own risk. Now, this is an educational session. I'm not going to be at first talking about any specific products. So one, I don't want you to take anything I say as a buy or sell recommendation. I'm doing this for your education purposes. After the slideshow, I will tell you that we are going to jump over to the platform, and I'm going to show you how to implement some of the tools that I'm going to teach you about on the platform. So that's where the don't take anything I'm saying as a buy or sell recommendation. We'll be playing around in an environment, and I want to show you how these tools work at Nadex. And in that regard, you know, I don't want you to take anything as trading advice. Okay, now, what are we going to cover? I mean, that's sort of the way that I set things up. What are we going to cover? Then I'll cover it, and then we'll do a quick review to make sure that we're solidifying all of this. The first thing I am going to mention up front is this is an interactive session. If you've got questions, type them in. I will make best efforts to answer them as I go, or I'll review them when I circle back at the end. Hopefully I'll get to everyone's question. If I don't, I will get to the questions. I will reach out to you separately through email or something. So if you've got questions, type them in. I'm also going to tell you right up front that if you would like a copy of this slide deck, email customerservice@nadex.com. I will mention that again later, but you can get a copy of this slide deck so you can review this later, which brings me to, this is being recorded. You'll be able to go back and review it again, both on our YouTube channel and on the Nadex website. So you'll be able to go back if you'd like to, and then if you got the slide deck, you can have it in front of you if you were to review this session, if you felt you needed to. Okay, now here's what we're going to cover. One, who is Nadex? Again, we've got a lot of new folks. I'm going to do a quick summary of Nadex, and then we're going to get into technical analysis. What is it? All right, so first, where does it even come from? And I'm going to give you a little bit of a history lesson, mostly because you're going to find it interesting. And then we're going to talk about the concept. What is it, the thought process behind technical analysis? And ultimately, why do you even care? I mean, we could talk about all this stuff, but in the end, why do you care, and what is it that you might get or benefit from understanding technical analysis? And then we'll go through some very, very basics, and I'm going to explain some terms and pictures. It's important, and a lot of people assume people know this, but it's not necessarily intuitive. So we'll go through a candlestick. We'll go through a candlestick chart. We're going to look at, what is it that we're looking for, namely trends, reversals, support and resistance. I'm going to go through all of that. And then there's tools at Nadex specifically to help you, indicators and drawing tools that you can apply to your charts. And again, if all of this is not making sense to you, it will shortly when we go through it. And again, I mentioned we're going to do a practical demonstration. All right, so there we go. That's what we're going to cover. Hopefully I gave you the housekeeping items, that it is important that if you've got any questions at Nadex, you can email us, customerservice@nadex.com. And if you'd like a copy of the slide deck, email customerservice@nadex.com, and they will be able to get you a slide deck probably in the next couple of days. And this recording should be up on YouTube and our website, hopefully later today. All right, so who is Nadex? One, Nadex it's an acronym. It stands for North American Derivatives Exchange. And what is Nadex? And it's important, and I highlight the important part, is it is a regulated exchange. We are regulated by the Commodity Future Trading Commission. Now, it is a regulatory body in the United States. It is the same regulator that the what I'll say larger futures exchanges report into as well. For instance, the CME, the Chicago Mercantile Exchange, or the Chicago Board of Trade, they report into the CFTC. So does ICE, the Intercontinental Exchange. They own the New York Stock Exchange. I worked for them for a while. They report into the CFTC as well. The reason I mention that is the designations don't matter as much, but Nadex is a regulated marketplace in the United States. You can access Nadex from outside the United States, and we list on our website all the countries that you can access Nadex from. But the reason I mention that is there are other binary option providers that you might find on the internet. There is only one other one in the United States that's regulated. All the rest of them, you're really not supposed to access from the United States, but there's nothing stopping you from doing that. But in that vein, if you wanted any recourse or something nefarious were to happen, you would have no recourse because they're offshore providers, and they don't have the rules that Nadex has. We are regulated. Everything that we do, we report into a regulator. We have to adhere to all the laws, regulations, and restrictions and obligations to be an exchange in the United States. And that is something that differentiates Nadex from all but one other binary option provider in the United States. Now, what is it that we provide? We provide contracts designed for the retail trader. All right, now what does that mean? And the truth is, all of you on this call are retail traders, but our contracts were designed specifically for small retail traders where, one, there's a low cost to entry. You do not need thousands of dollars to access price action in the markets because Nadex offers low notional value, low dollar amount contracts for people to take an opinion in the markets. And then more so, we do it in a defined risk way. Whenever you do a trade on Nadex, all of our contracts have very, very clearly defined risk and reward before you even get into a trade. So there are no surprises. You go to another futures exchange and there's things like margin call, initial margin, maintenance margin. There can be a gap and you can lose a lot more than you initially put into a trade. There are, there could be challenges to a small retail trader in those more traditional markets. At Nadex, low cost of entry, very defined risk. So it gives people an opportunity to take an opinion in the marketplace and try to trade, knowing that their risk is a quantifiable number and there won't be any potential surprises if something goes wrong. All right, and what is it that we provide? We provide binary options, call spreads, knockouts. If you have any questions about any of those, you can look on our website in the archive section. We've got a lot of webinars where we go into depth on those products. We've got a lot of other educational materials on our website as well. So those are the products that we offer, but let's get into technical analysis. Now, first up is a little history lesson. Just because I find it fascinating, and I think you will too, you might even recognize the name, but there was a guy who lived around the turn of the century, well over 100 years ago, Charles Dow. Charles Dow, and he is considered the father of technical analysis. Now, first, in 1882, he founded Dow Jones and Company. He did that with Edward Jones. So Charles Dow and Edward Jones created this company. You might have heard of Dow Jones. And initially, they were a media entity. They wrote a newsletter. That newsletter they wanted to be an independent source for news and information around the markets, because back then there were a lot of people providing commentary, but they were paid to do so. Dow and Jones wanted to do it independently. That little newsletter turned into the Wall Street Journal. So I'm sure you've all heard of the Wall Street Journal, a very accredited, esteemed a media news entity in the financial services space. And that was actually founded in 1889 by Charles Dow. Now, Charles Dow was definitely an academic. He did his newsletter. They turned it into the Wall Street Journal, but he had some ideas around the markets, and he wanted to take a look at how prices of assets moved over time. He wanted a way to track those prices. Now, in order to do that, he invented a little thing called the Dow Jones Industrial Average. So yes, we all know Mr. Charles Dow did quite a bit in his day to advance people's ability to monitor and understand the financial markets. So when he created the Dow Jones Industrial Average, he created a theory. He was an academic, and he had some ideas around how you can analyze and understand and interpret price movement in the market. Now, that theory is called Dow theory. If you went and took a class at a school and you were to do an economics class, you could do an entire course on Dow theory. What is it that Dow thought about the markets, understanding how prices moved? And there were a bunch of different principles, tenets for understanding and analyzing market behavior. That set the foundation for what eventually became or has become technical analysis. So technical analysis, really, it was a culmination of a lot of work from Charles Dow, who had some ideas, created some tools, and then he analyzed the market and came up with a theory for analyzing and trying to understand market behavior. Now, why is it that prices move the way that prices move? So let's take a look a little bit behind Dow theory. And Dow theory is the concept that is set up technical analysis. So one of the tenets, and I'm not going to go through all the tenets of Dow theory. I'm just going to pick a couple of them that are that drive the point home. Number one is he believed that markets are efficient, all right? That there are rational markets and they are entirely efficient. And what that means is that any moment in time, all news that is publicly available, whether it's the balance sheet, the cash flow statements, everything about a company, what their revenue stream looks like, what their costs are, what their future plans are, everything is available. And everybody in the market immediately discounts that in the stock price. What does that mean? That whenever you look at a stock price or the price of an asset, all known information is included in the price right now, and that is a fair price. And that's what efficient markets mean. Now, well, if everything is known and factored into the price, say, of a stock, then why do stock prices move? Well, actually, before we get into that, I want to go through a little bit of Dow theory. I apologize. I was getting ahead of myself. One, all known information is in the stock price. Now, if you took that stock price and you put it on a chart, okay, you could put a little dot on a chart and says, at this moment in time, the price was X. And at the next moment in time, the price was Y. And you could put and plot the price movement on a chart, and you would see, and if you connected all those dots, you would see the price go up and down on a chart. And more so, if you watched over time, that there would be patterns, that you could see. All right, and we'll get into what a pattern means, but that you could see those patterns and that they would be, you could identify them. So if you could plot everything on a chart and then over time you watch the prices on that chart change, you will eventually see some patterns form and that you would be able to identify them. So what is it that would move prices if everything is already known? Well, the price then, the only thing that would really change how a price would move other than a new piece of news. So, and that's called event-based trading. Hey, they're going to say something and the news is going to make something happen. The stock's going to make a big move. Other than that, it's all based on supply and demand. And the way that would work is if there's more buyers than sellers, the price of something would go up. And if there were more sellers than buyers, the price would go down. So you would see prices trend on a chart. You would be looking for patterns. And these prices would trend based on supply and demand, more buyers going higher, more sellers going lower. And the only thing that would cause these trends to shift or change would be if supply and demand got out of balance. And if you looked at these patterns on a chart, you would see them and that they would eventually at some point repeat themselves. So you could learn to identify patterns, and it wouldn't matter what chart you were looking at. You could look at a chart of any asset and you might see patterns from that you identified in a different asset show up in another asset. So it's all about looking at these patterns on a chart. So now, why do you care? All right, what does that mean? Great. What do I care? Well, here's why you would care. If you were to understand technical analysis and look at these charts and look for these types of patterns, you might be able to take advantage of opportunities. All right, what kind of opportunities? Well, one, you're looking for trends. All right, is it trending higher? Is it trending lower? Because if it's trending higher and there's more buyers than sellers, you might want to be a buyer and ride the wave. all right? And if there's more sellers than buyers and it's trending lower. So traders are looking to take advantage of charts by looking at them, identifying patterns, and then looking for those trends or looking for reversals in those trends. When might supply and demand shift? At which point a trend that was going down might all of a sudden start going up, or a trend that was going up might start going down. And in the industry, there's a saying that, if you haven't heard this before, a lot of traders will say it is, the trend is your friend. You don't fight the trend. If it's trending one way and that's what supply and demand is telling you, then go with it. That's what you're looking to identify. Go with the trend. If the trend's going up, you want to be a buyer. If the trend's going down, you want to be a seller. And then if the trend shifts, change your opinion and go the other way. So this is what traders are looking for. Now, the question is what constitutes these trends, or what is it in these trends that you would be looking for? And really, it's to help you identify two things. All right, what is it? If you're looking for these trends, what are you looking for? One, you're looking for an entry point. Hey, when would I want to start getting into this trade? All right, what's at what level would I want to then start being a buyer? Or at what level would I want to sell what I own and maybe go short and take a bearish position? You know, what is it? So you're looking for, one, to identify where to get in, and two, just as important, where to get out. And for an exit strategy, people will often look for two different exit strategies. One is, where would you look to take profits? All right, at what point, if I was right and I got on a trend and the trend is my friend, and let's say I bought something, at what point would I want to sell it and take a profit and get out and say, thank you very much? But you also might, just in case you're wrong, say, at what point would I want to sell it and stop my losses? I tried to read this chart and the trend wasn't my friend, and we'll get into that in a little bit. But that's what traders are doing. That's why you want to use technical analysis. It's your ability to look at a chart, see this price movement, look for these trends or these reversals or some type of pattern that you think might be repeating itself from something you've seen in the past, and it would give you an opportunity to either get into a trade, long or short, and then where would you get out of that? Either, you know, looking to take a profit, and it's important that you have a strategy to exit for a profit at some point, or to stop your losses if you're wrong. All right, so that's why you care about technical analysis. Now let's get into the thick of it. All right, let's start talking about some specifics. So number one, we talked about plotting a chart. Now, when people look at a price chart, they usually don't look at a little dot. Candlestick charts are probably the most popular form of chart. All right, so what is a candlestick? Now, I've got two candlesticks up here right now. Now, first up, a candlestick is a measure of the price of an asset, and you have to choose the period of time for that candlestick. All right, so this candle could be a candle, it could be a 1 minute candlestick. It could be a 10-minute candlestick. It could be a 30-minute candlestick. It could be an hour. It could be a day, right? The time frame for an individual candle is up to you to decide at, you know, how you want to look at that. And we're going to cover that on the very next slide. But knowing that, let's just say this is a 15-minute candlestick. What am I looking at? And let's take a look at the green one, the one on the left first. When you see a candlestick, you'll see there is a body to that candlestick, and it is a color. All right. This candlestick is green. The bottom of the body is where the price opened in those 15 minutes. So when this 15-minute candle formed, there was a price where it started trading in those 15 minutes. The top of the body is where it closed. Now you can notice it's a green candlestick. The bottom, the opening price is lower than where it closed at the end of 15 minutes, the very last price point. That's why it's a green candlestick. It's a green candlestick because it traded higher during this 15-minute little window. Now, if it had traded lower, that's where the red candlestick comes in. If you look over to the right, the red candlestick, where it opened, that was the first price in this 15-minute little window for this one candlestick. It then traded lower, and at the end of 15 minutes, the price was lower. That's why the candlestick is colored red. So every candlestick is going to either be, it's going to have a body that's either red or green, meaning if it opened and went higher in those 15 minutes, it's green. If it's opened and went lower, it's going to be red. And you can see exactly what price that it was, that the asset was at when it started the 15 minutes and when it ended the 15 minutes. Now, poking out from each end of the body, those are called wicks. All right. Now, the wick just shows you the entire range of that particular candlestick. So it shows you the lowest price that during that 15 minutes, it shows you the highest price in that 15 minutes. So you've got a body and you've got two wicks. If it's green, it traded higher in that 15-minute period. If it's red, it traded lower. Now, does it have to have a wick? The answer is no. You might see candles that don't have a wick at all, or they've only got a wick on one end. All that means is it traded outside of where it opened or where it closed during that period as well. So for instance, if it opened, went higher, came back down a little bit, you would see a green wick as long as it closed higher than the open. There might not be any wick on the bottom. The low and the open might have been the same price, in which case there would be no bottom wick. All right, so hopefully that makes sense. We've got a candle, and it could be a 1 minute, it could be 10 minutes, it could be 15 minutes, 30 minutes, an hour, a day. You're looking at a moment in time. I'm going to use 15 minutes as an example, and you can see whether something traded higher or lower in that 15-minute window, and if there was a range around that. Now, if you take these individual candles, these candlesticks, and there's 15 minutes and you get a nice measurement and they put it on a chart, and then you get another 15 minutes and you put another candlestick on the chart, and it's going to look different. And then every 15 minutes, you line all of these candlesticks up, and you're going to end up with a chart of candlesticks. All right. All right, so now let me, I'm going to share that whole slide. Whoops, I went a little too fast. I'm going to share this whole slide because you can see that I've got two pictures up here, and you can see how, let's use the picture on the bottom first. You can see there are a bunch of individual candlesticks, all right? And then what I'm looking at is a chart. All right, I've got a chart and I've got my individual candlesticks. Now, I'm going to start with the bottom point here. Remember, I mentioned you've got to consider time frame, trends and time frames. All right, how do we identify trends, and what do I mean by time frame? Well, first, there's a time interval for each candlestick. Right, as I mentioned, you might want 15 minutes, you might want 30 minutes, and there might be reasons for you to sometimes look at a 15-minute chart versus a 4-hour chart, where each candlestick is something on 4 hours, for you to get a different view of what the market might be doing, because your charts will look a little different if you've got different time frames on your candlesticks. Right now, the second thing, because I'm actually working myself in reverse order. Not only does each candlestick have a time frame, but then there's the time frame that you look for your whole chart. If I look at the last 4 hours, and I'm using a 15-minute candlestick chart, I'm going to have 8 candles in there, right? Because every 15 minutes I get one. If I'm looking at the last, I said the last 4 hours, I'm sorry, 4 times 4 is 16. I'll have 16 candles on my chart. If you're looking to identify a trend, all right, the bottom chart, and this is that short-term, long-term, and this is the top point. If you look at the chart from the bottom, you can see that this has been in an uptrend. All right, the picture of this chart is an uptrend. You can see the first half of the chart, it was actually a very steep uptrend. But if I look back, because there was a sell-off in here a little bit, it still is an uptrend. If I look from the left to the right, the price has steadily been going up. So my question is, well, is this a buying opportunity or a selling opportunity? Well, if you look at a long-term time frame, it's still in an uptrend, even though it's had some pretty severe sell-offs. Now, if I look, and the picture on the right, the one up above, I'm zooming in on the right-hand side of the chart. It's the same chart. I'm just zooming in to the tail of this chart. It's actually in a downtrend. You can see, and if you look at the chart below, if I look at it more recently, it's in a bit of a downtrend. So when you're looking for patterns and you're trying to identify trends, the time frame that you use is actually kind of important, because if you use a longer time frame versus a shorter time frame, you might see a different trend. Now, if you're doing short-term trading and you're doing day trading, you might want to be using time frames that are shorter versus longer. If you're looking to build a long-term portfolio and own a bunch of, you might be looking for longer term time frames. So your time frame for your trade and what you're looking to accomplish will help you decide and determine what parameters you want to use when you're trying to identify trends. So if you're doing short-term trading, you might want to be using 5, 10, 15-minute charts, maybe 30-minute or an hour versus longer-term charts. And you might want to be looking at the last couple of days versus the last few months, all right? Because you're going to see a different trend when you look at short-term versus longer-term, potentially. Okay, so hopefully that all made sense. Now I want to show you a couple of patterns. All right, I mean, we're just laying out some basics. There is no way that I would be able to go through all technical analysis in one session. I just want you to get a taste and a basic understanding of what some of these patterns could potentially look like. And there are a bunch of different patterns. Now, I mentioned trends, and we were just looking at trends, and it depends on your time frame. And if you just kind of sort of step back, you can see if something is trending higher or trending lower. I'm going to show you some tools, things like channels and that when I get over to the platform to enhance upon some of that trend analysis. Now, like we mentioned up front, why do you care? What is it that traders are looking for? Well, one, they're looking for trends. Traders are using technical analysis. The trend is your friend. I want to get on the trend when it's going. If people are buying, I want to be a buyer. If people are selling, I want to be a seller. But then the other point is, when might it turn around? What is it that could happen on a chart? What kind of candlestick formations might I see that could help me identify when that trend might be changing, when it might turn around? All right, so now I'm going to give you a couple of reversal patterns that you might see. The first one's called the hammer. All right, now, what is a hammer? On the left-hand side of the chart, you can see a hammer can be either green or red. Now, if you take a look at a hammer, I'm just looking at the left-hand side of the chart, it kind of looks like a hammer. It's a very short body up top. It's got a short body up top, and it's got a long wick below. It looks like a hammer. Notice there is no wick on the top. All right, remember how I said there didn't have to always be a wick? There is no wick on the top. It's got a short body up top and a long wick below. And what you're looking for in a reversal is with a hammer is if you see a downtrend happening. And if you look at the little chart on the right now, you'll see there's candles, candles, candles. And you can see that we're in a downtrend. All right, we might have red and green candles, but you can see that it's moving lower. And then what's happened is a hammer gets formed. And I've got the hammer circled. Now, why is it called a hammer? And what ended up happening is all of the sellers seem to have been depleted. They hammered this down as far as they think they can go. Lots and lots and lots of sellers. But now you've got this little formation with a short body. It had a long tail and it came right back up. And it's an indicator that you might see a reversal, that even though you were in a downtrend, this hammer shows up and you might want to be looking for it to reverse and start going back into an uptrend. Now, there are two types of hammers. There are green ones and red ones. Notice on the green one, it opened, there's this long tail down, but when it closed, it was slightly higher. That is actually a stronger signal. When the hammer is green, all right, you're in a downtrend and you get a green hammer, that's a stronger signal than, say, the red one, which would be a slightly weaker signal, all right, because it opened, it did close, still close lower, but it formed a hammer formation. So a hammer can potentially be red, but if it's green, it is a stronger signal. Right now, I'm going to show you the exact same formation. It's called a hanging man, but instead of being in a downtrend, it's a reversal when you're in an uptrend. So if you look at a picture of a hammer and you look at a picture of a hanging man, they're essentially identical. Some people, yes, the body on this picture is a little smaller because we just did a picture. Could the body be a little bit bigger? Yes. It pretty much looks just like a hammer. All right. But the big difference being is we're in an uptrend. All right. The price is trading higher, trading higher. We've got red and green, and you can see we've got different candles. But then you see this specific candle, and it indicates that the buyers have been trying, and the buyers are getting tired, and you might now see sellers step in, and you might see a reversal in the uptrend into a downtrend. Okay, hopefully if you look at these based upon what I've kind of given you, how to read an individual candle, one specific candle, if you saw this candle on your chart, you might be looking at a potential reversal. And this is exactly what traders are looking for. When should I get on that trend? How can I stay on that trend? And if something were to change, how do I know to maybe get out of my trade and start reanalyzing and rethinking the direction or my opinion on where the price of this asset might go next. All right, so there's a couple of little formations. That's reversals. I would like to talk about, and again, a reminder, a hammer. A hammer is a buy signal. All right, it's a buy signal when you're in a downtrend and you're looking for a reversal. And a hanging man is a sell signal. You're in an uptrend, you see a hanging man, it's a sell signal to potentially look for a reversal. All right, now I want to talk about support and resistance. And you will hear a lot of people talk about support and resistance. In fact, it's one of the primary technical analysis tools that we use. We do a daily morning analysis. If you don't know, I'll actually show that to you later. We're going to start doing them at 8:45 a.m. Eastern, 7:45 a.m. Central, starting next week. but we do a quick 15, 20-minute analysis, and we look at charts and we look for support and resistance. And where is it that we see on a chart where sellers come in, and where do we see buyers coming in, and could we potentially see a repeat performance? Now, here's a picture of the S&P 500. All right, and I want to show you, I've got two gray lines that I've drawn on there. The bottom one is where we tend to see support. The top one is where we were seeing resistance. And you can see how I put them on there. This is all based on a price chart. Where do we tend to see people step in? Now, I want to walk through what I'm looking at and how I put these on here. On the left-hand side, you can see when it touched this bottom line, even when there were sellers, buyers seem to have stepped in, and it had a hard time going beneath this line. That is why it is considered support. For some reason, at this price level, buyers step in. All right, this is that supply and demand discussion. At this price level, buyers have been stepping in. Now, what happens? There's this level up here, which was a resistance level, okay? But it broke through that level. You can see that it clearly went through that resistance level. And when that happens, you tend to see that level then become support for a bit, which you saw it do as it went sideways. It went sideways for a little bit, and then it kept going higher. All right, but then it broke down. Notice it's not perfect, and we're going to talk about that as well. It went straight through that level, but look where it went down to. When it broke and it went down, it came all the way back down to that initial support level. So when you see a trend happening, you try to get on that trend, but then if you want to wait, when it gets down to this level, you knew it was support from before, you could try to anticipate thinking, hey, this is an opportunity. Buyers tend to come in here. Maybe I want to get in and be a buyer. It is a support level. And in fact, it was. It trended sideways. It went up and down a bit, but it's kept on holding that level. And when it went higher, it made it back up to that resistance level again. When should you get out? Well, if you bought below at the support, you probably want to sell up at the resistance. Could it have gone higher? Of course, it did earlier. There's no crystal ball here. There's no way for you to totally predict what's going to happen. But what you're looking to do is find these patterns, identify them, and try to take advantage of them. And that resistance level up above kept on. It held. It could not poke through, and it was telling you, all right. We had support down below. We've got resistance up above. This is an opportunity to get out of your trade, an opportunity to go short. It kept on trying. It just couldn't get through, and it went down, right? And it came all the way back down right to that support level again. So support and resistance are important things to look at, and you could try to identify those levels where, based on price action, where buyers tend to step in and where sellers tend to step in. Now, I'm looking at a very broad, were there opportunities in between there? And the answer is yes, actually. And now this is a tool, and I will show you how to use it. This is called Fibonacci. Now, if you're not familiar with Fibonacci, and it's called the Fibonacci retracement, it's a ratio. It's a ratio, and what Fibonacci identified, it's a mathematical ratio that is actually seen in nature. It's a naturally occurring ratio based on percentages. We see it in flowers. We see it in animals, like on a snail shell. We see it in the human body. Leonardo da Vinci, actually, when you look at some of these pictures of the perfect human body, the Fibonacci ratios are incorporated into that. Humans have used it when building architecture. So it's a naturally occurring ratio. You don't have to be able to calculate it. I'll show you how to put it on a chart. And if I actually put Fibonacci on this chart, it's rather interesting. If I look at the bottom support, and then actually the top, the very top where it turned around, there are certain retracement levels. and you don't have to be able to calculate these, but that tend to be support and resistance. In fact, if you can look, our initial support is right there where my gray bar was. The upper level resistance that I put was actually a Fibonacci level, 76.4% retracement. It's just rather interesting that it fit. I identified on a chart just based on the price, support and resistance, and as it turns out, Fibonacci fit right in there as well. Now, if we're going to get into Fibonacci, this is that level of resistance that ended up just showing up on the chart, but there are levels in between. If you were looking for shorter term price action, instead of waiting for it to move between these large support and resistance lines, notice that there are support at this 23.6 level. Notice how whenever it got to that 23.6 later in the day, it seemed to find some support. And that 38.2 right above it seemed to be resistance. Right? Now, it wasn't perfect. It wasn't perfect because you can see there were some areas where it got outside of those levels. And oddly enough, those two were also Fibonacci levels. So people use the Fibonacci retracement tool to see where they might see support and resistance. And as you look at this particular chart, you can see, although it's not perfect, there is some observations that seem to make these ratios work and provide opportunities for you to find a place where you might want to enter or exit a trade. All right, so I wanted to go, we went through trends where you're looking for long-term trends or short-term trends. We went through support and resistance. Where do natural buyers and sellers come in? Now, remember, that works until it doesn't work because supply and demand might change. There might be a news event that causes it to move. So it's a living organism, okay? Now, Nadex does have indicators and drawing tools to help you. All right, we've got 25 plus indicators baked into the charts. I will go through and show you how you can find those and how you can populate your chart with technical indicators. You don't need to be able to do these all yourself. We automate some of it. Now, if you're not familiar with an indicator, you can see there's a little eye on there. We give you some in-platform education to help you understand some of the basics. But we've got a variety of indicators. Not only do we have indicators, but we've also got a bunch of different drawing tools, Fibonacci being one of them, but there are a bunch of other tools that you can use, things like channels. You can put in your own support and resistance lines using either a rectangle, which I like to use, or just a plain old horizontal line. But you can draw and use a variety of drawing tools to help you identify the patterns that you're looking for. Okay, so we do have this all available on the platform, and we're going to get there in a second. Now, after all of this is important. All right, whenever you're using technical analysis, or you're looking at charting, I am going to say caveat emptor, buyer beware. All right, charts are not 100% accurate. Okay, the saying is, even the Titanic had a chart room. The Titanic had a chart room. That ship, in fact, every ship on the bottom of the ocean had a chart room. And look where they ended up. So it's important to understand that charts are not 100% accurate. They're a tool for you to use to help you in your trading decisions. They're not the law. We know that they're not perfect, okay? So in that vein, it's always wise to manage your risk. You've got to have risk. And that is actually part of the tenets right at the very beginning of why do you care about technical analysis. It's not just to identify where to get into a trade, but it's also where you might want to get out of a trade. And remember, and this is bringing us full circle, getting out of a trade is both identifying opportunities where you would take a profit if you're right, or where you would stop losses if you're wrong. Okay, so people do use technical analysis to say, oops, I was wrong. Something has changed. Supply and demand has changed. I need to reassess. Get me out. Okay, that's the slideshow. Again, if you would like a copy of the slide deck, please email customerservice@nadex.com. If you email them, they can send you a copy of this slide deck. I'm also mentioning follow us on social media. I am specifically going to point out YouTube. In fact, I'm going to show that to you. I mentioned every morning for 15 minutes, we do some morning technical analysis before the US equity markets open. We talk about what happened overnight, what news might be coming out during the day for news trading events, and we take a look at a couple of charts at hot spots in the market, and we try to look where might there be some opportunities, where might you want to be looking, where are things trending, where are we seeing support and resistance, and it can help you sort of get your thoughts together before the trading day starts. I'm also going to mention Trustpilot. If you could go to trustpilot.com, trustpilot.com/review/nadex.com. And if you just go into trustpilot.com and search for nadex.com, we would greatly appreciate if you can give us some feedback. It's something that we're trying to build out at Nadex here in the States. If you can go to Trustpilot, it would be greatly appreciated. All right, that's the slide deck portion. I still have, I'm going to go into a little bit of show and tell. So if you give me a second here, I am going to change what I'm sharing with you. Give me 1 second here, and I want to go here. Okay, you should now be looking at the Nadex YouTube channel. Notice here that I am on the videos tab. When you go to our Nadex YouTube channel, if you go to YouTube and look for Nadex, there's our home page. We've got a bunch of playlists. If you go to videos, this is what I would recommend. This, you'll find the recording here. In fact, let me refresh this a little bit. What's important here is if you see where it says uploads, if I drop that down, this upcoming live streams, now I've only got a session set for tomorrow. Later today, I'll put out, you'll see about a week's worth of sessions, and you can actually set a reminder to join us. So I would say, look, there's actually one person that's waiting for us already. They're gonna be waiting a while. I'm not doing that till tomorrow morning. But we started doing these at 8 a.m. Central, 9 a.m. Eastern. We're going to start 15 minutes earlier starting next week. But it's a great place if you want to join us and get a little bit of some ideas just to think about hot spots in the market. Join us. We do that every single morning. Okay, now I'm going to jump over to the platform. So you should be looking at the Nadex platform. I'm going to make this a little bit bigger so that we can see it. And I'm going to, oh, by the way, I'm going to mention too, webinars. If you go to learning, webinars, I'm going to go to webinars, right? This is this session right now. In the archive, this is where you'll find the recording as well. So you could just come to learning webinars and go to our archive. It'll make it very easy to find our recordings. And if you're looking for binary option, knockout, call spread, it's all up here. It's all up here. You can review it. The one thing I am going to tease up, if you scroll down, in a couple of weeks, March 16th, put it on your calendar, March 16th, an entire day. It's a full day. We're actually going to start at 11 a.m. Eastern. I got to fix that time. But it's how to be a day trader at Nadex, and we're going to do a full-blown day, basics of binary options, basics of call spreads and knockouts. My colleague Dan Cook is going to talk about some day trading strategies for binary options, as well as knockouts and call spreads. My education partner, Brian Caprice, who joins me every morning, helping to identify opportunities, short duration. And then our partner, Daily FX, Chris Vecchio, is going to talk about trading psychology. So put it on your calendar, March 16th. You can go and register right now on the Nadex website. If you go to learning webinars and just scroll down, you'll find it there. Okay, now I'm going to log into the platform. And let's take a look. I'm going to jump in. Now, if you do not have a demo account, I would recommend you get one. This is a great place for you to practice and you get some paper funds. The markets that you see, are nearly identical to what's in production. But of course, because there's different people looking at a demo account, and you can see it's a demo account up here, versus the live environment, it's going to be a little different. All right, let's take a look at some technical analysis. Now I'm going to just randomly pick, I'm going to go to our knockouts. I'm going to go to commodities. Let's take a look. I'm going to take a look at gold, and I'm going to click on any one of these gold contracts to get a chart up here. I'm going to hide that. I'm going to hide this, and we're going to take a look at gold. Okay. Now, what is it that I can do to customize my chart to see it the way that I want to see it? First up, in the upper left-hand corner, I currently have this at 1 minute. That means each one of these candles is a 1 minute time frame. That might be a little too close. I'm going to change this to 15 minutes. All right. So now each candle is a 15-minute candle. The second thing I'm going to do, my date range. What do I want to see? I might just want to see the past day. I might want to see the past week. I can scroll with my mouse and change that. Notice that there's a time frame across the bottom so I know what I'm looking at. If I looked right now at a price at the chart of gold, it looks like gold is clearly in a downward trend, right? And you can see that, right? Gold's in a downtrend. Now it's rallied, so depending upon what you're doing, if you're a short-term trader, you got to be aware of that, right? Short-term, long-term trends, what's actually happening. Now I am going to zoom in. Let's make this a week. I'm going to make this not 1 hour. I want to make this 15 minutes and 1 week. Oh, you know what? I think if I want to do a week, let's go 15 minutes. All right, I'm just going to zoom in. There we go. I'm going to do it with my mouse. All right, now, one was trends. I'm looking at a trend here. Now, how could I do this with a trend? I'm just going to go ahead and notice that we've got indicators, and we could drop some indicators on. Okay, any of your indicators. If I want to see my moving averages, all right, let's go to moving averages. I'm going to click on moving averages, and I can customize what I see. I'm going to click on that little box down there. One, I'm going to make my lines thicker. Maybe I don't care about the 100 bar moving average. Maybe I want to use a shorter moving average. I'm going to make it a 10. So I can customize any of this, and I can maybe make this a 30. All right, because I'm doing shorter term trading. I want to see these. I'm going to go ahead and I'm going to change the colors too. Let's make this one purple. I'll leave that one as green. I'm gonna hit apply. All right, so I've got my moving averages on here, and people look for when one moving average crosses over the other moving average. There's all sorts of different ways to use that. I just wanted to show you that you can put moving averages on your charts. Now, let's go ahead and take moving averages off because I don't want to clutter up my chart. I am going to use, let's take a look at some drawing tools. All right, now if I want to look at a trend, one way for me to do this, I could do a trend line, and I click in one corner, and it'll let me do a trend line, and I could sort of fit my trend line in here. And if I want to adjust that line, I can just grab it and adjust it so that it looks the way that I want it to look. Now that's just a trend line. What a lot of people will do is they'll actually use channels. Even though it's trending down, I might be able to trade higher highs and lower lows. So let's go ahead and hit a channel here. And I'm going to show you how this channel works. I'm going to channel this last move over here, where I'm going to try to get the top end of the channel and the bottom end of the channel. I might have to adjust this some. Let's zoom it in a bit, slide my chart over. And I'm going to try to adjust my channel a bit. There we go. I think I've got it. Okay, I got it approximately in there. What a channel did was give me parallel lines, all right, and it grays in an area. of a downward channel. I mean, if I really wanted to do a trend line just of this, let me get rid of this. This is a longer term trend line. Let me draw a shorter term trend line in here. All right, and my shorter term trend line might have been something like this. What that channel does is it actually gives me around that trend line, and I can fit it where when it hit the top of the channel, it was a selling opportunity. All right. And when it hit the bottom of the channel, all the way down here, it touched it, it actually became a temporary buying opportunity. Even though I'm in a downtrend, when it hit the bottom of the channel. So people are looking, and there's so many different things that you can look at. There's trends. You're identifying, here's a longer term trend. Here's a shorter term trend. Here's that shorter term trend inside of a channel. Okay, so you've got all a variety. Now, if I wanted to draw some of my own support and resistance, and let's say I'm going to use a rectangle, right, where levels where I tend to see buyers kind of come in, sellers come in, which is right around here. I can put this on my chart. Now I'm going to back this chart up a bit. Where might I, and if I were doing that, look at this. Remember, it's not always perfect. I mean, if I were actually looking, I might have thought using my rectangles that I would have seen some type of support here. I mean, there were buyers back here, right? There were buyers right here. And when it came down, and when it came the third time, and you thought, hey, buyers are going to step in. Interestingly enough, they did for a very brief second. There is one candle in that 15-minute period. When it hit this level, buyers did step in very briefly, and then it completely broke through it. But it's these are all tools. You can put your own support and resistance. You can put your own longer term, shorter term time trends in. You can put channels in. All right, there's the channels. And if I am going to show you, I mentioned that I was going to show you how to do Fibonacci. All right, and let me show you how to do that. And that's going to be the one last thing, because I know we're running a little late and I want to be cognizant of your time. Here's how Fibonacci works. We can see, I'm going to take all of this off. You know what? I'm going to leave it. One thing you don't want to do your chart is clutter it up like I've done here, but for the sake of time, I'm just going to go ahead and leave it. And I want to show you how Fibonacci works. If I go to Fibonacci, I can click Fibonacci retracement, and it's 1, 2, 3. All right, I click Fibonacci retracement. I start in the upper left-hand corner. All right, because I'm in a downtrend. If I were in an uptrend, I would start in the bottom left-hand corner. I click 1, and I'm now going to draw a trend line. All right, but I'm going to draw it all the way down to where the bottom of this is. Okay, all the way down here. There we go. And then I could drag it over to the right to extend it out. Now, what I've done, 1, 2, 3, I've put Fibonacci on here, and this is really rather interesting. When I put Fibonacci on here, when I started in the upper left and went down to the lower right, all right, because I'm in a downtrend. If it was the other way, I would have started in the bottom left and gone to the upper right if we were in an uptrend. Let's see, are these Fibonacci levels some support and resistance levels? And indeed, they are. I'm going to put rectangles around them so you can actually see them. This 74.6 level was definitely a level. I mean, you can see how it trended in here. When it hit here, it was support. It was support. It was support. It did break through it. It was even support. It was resistance when it came up here. So when you've got Fibonacci on here, it does help you see where support and resistance may be. There was even this level down below. I'm going to do one more. This level, the 61.8. I mean, you can even see that this was a level right in here where it was support. It was support. I mean, it was a bit of resistance. We were in a downtrend, but there was some places where it was showing a propensity to potentially take a change. But you can see how, I mean, it was bouncing between these levels. Resistance, support, resistance, support. until it wasn't. Right? And remember, there's a chart room at the bottom in every ship at the bottom of the ocean. These are simply tools to help guide you. All right, now I do want to go back. Interesting. All right, I'll answer that question later. In any case, I've recorded this. I want to thank you all for joining me today. I want to remind you again, join us in the mornings at those sessions. Go to YouTube and join us every morning. You can set reminders, but we also record those, and those recordings are immediately available. So if you miss one, you can watch it. If you're an hour late, you can still go back and watch it. It still might help you with some ideas throughout the day. 2, this is recorded. It'll be on our website as well as on our YouTube channel. And 3, if you're looking for the slide deck, please email customerservice@nadex.com. With that, I want to thank everyone for joining us, and I want to wish you all good luck in the markets. Go to the webinars page, also sign up for our upcoming boot camp. Thanks everyone for joining. I'll catch you next time.